Very good evening, everyone. Welcome to the next installment of our quarterly lender market analysis by Huttons Lender Division. We're going to do a self-introduction, a lot easier. Okay, this is our quarterly event that we hold, I think, quite highly anticipated according to a lot of the participants. So thank you for tuning in. Right. So there's some brief introduction of myself, but more importantly here, I think there are 6 and 7 of us. So I'll just skip this. You can read about me and my profile and accolades. Okay, I think Sean has tried to explain earlier. Right, but I think the key thing here is about, I think the shared success that I have with Huttons Lender Division that was first formed in 2014-15 and then rebranded to Huttons Lender Division about 3 years ago. All right, so one of the things that we have done is actually to share our insights on the lender market. So today, okay, besides this, of course, we have been featured also. I think our team's achievements, what we've done before, because we've done quite a unique and have adopted a lot of market-leading strategies, right? Besides marketing, there's also the ways that we engage our clients as well. All right, we're quite thankful to be featured. And important, I have my league of brotherhood, my gentlemen here today. Okay, they are namely basically the various district ICs, right? The in charge or the team leaders for the various districts from Michael, right, District 16, to Cindric, District 21, 23. I have Will, District 10, 11, Jason, 13 and 14, Sean, 19, 20, 28, our Northeast region, and Justin for 15. Right, so they will come later to share with you part of basically all the information that we have for you today. Hey, how's everyone? Okay, we're about 60 plus participants now. If this is the first time you're hearing about Huttons Lender Division, these 5 QR codes here will be very useful. Okay, these are basically our social media platforms. Can scan the codes here, basically in Facebook, YouTube, Instagram, TikTok. We are there. You can just key in Huttons Lender Division. You will see what we have been doing. I think not just for our buyers, for our sellers as well. All right, including actually our webinars. Later I'll share a while. Okay, so talking about the webinars, I think since many years ago, we've started to actually publish our quarterly results, okay, our findings. I think one thing about us that that we believe in is to share whatever we learn, all right, what we know about the market, and we organize the information and to share not just with buyers, sellers, and I believe there's a lot of co-broker partners in the market as well, all right. These are just some of the various reports and webinars that we have done. Okay, the last being actually held just 1 quarter, 3 months ago. This is 2023 Q1 lender market analysis. So if I missed this, don't worry, because all our webinars have been updated or uploaded onto our YouTube channel. So this is the QR code. If you have missed this, just scan this first, and then you can revisit. All right, the results for Q1. Okay, so disclaimer, today's results, okay, we're here as much as possible. Our source data is as of 10th of July, as at basically 2 to 3 days ago. We need to state this disclaimer because the numbers run, all right, the numbers run. So basically numbers that we obtained today may be slightly different from 2 to 3 days ago, even though we're taking numbers from basically Q2 that's supposed to end in the end of June, but some of the data are still being cleaned by URA, therefore the numbers may not be as accurate. In any case, what information is provided is to the best ability, and we want to here also disclaim that it should not be used for any errors, omission, of course, in using your decision making, all right, as much as we can. If you're unsure about anything, feel free to just ask us. Okay, with this, let's just start and understand. This is a common question we ask. We just want to know whether the attendees here, can you share with us whether this is the first time that you are attending this webinar? All right, let's just have an understanding. We have newcomers all the time. We also have a lot of people who follow us religiously 4 times a year. Okay, let's do a quick poll. We have now, okay, a lot of first timers here. 61% versus 40%. Okay, good. About that, is the same guys as the previous ones? Do we have more newcomers? Seems as if a lot of newcomers, and right. Not that we will change our content. I think we just want to understand a bit more. I think a lot of our past followers have gotten smarter and they just go to our YouTube to watch after that. All right, thank you. And the poll. With this, yes, hold on, let me just click this. All right. If this is the first time attending, feel free to just mark down any questions, right? You can put inside the chat. our leaders are also here as well. In case anything comes up to your mind, we will try our best to answer. There will also be a Q&A section towards the end as well. So just bring this forward. Okay, so this will be the sequence. We will talk about the total market first. What happened to Singapore's landed market as a whole, right? Basically for the entire Singapore. And then after that is where we're going to do a deep dive, right, into the various regions, namely East, Central, West, and Northeast region. And followed by our conclusion. Of course, we'll leave some time for Q&A if possible. All right. So I know some of you have particular interest in certain regions, you may want to mark the time, come back slightly later, but otherwise, I promise you that it will be data and information filled, that every second of your time here will not be left wasted, okay? Speaking of which, this is probably the first time we are diving, every time we try to push the envelope, all right? So for us, this is the first time we're going to go the deepest ever, all right? Deepest dive in the sense that in terms of analysis of the data, we are actually crossing beyond later what I'll share with you, our non-core regions. So besides that, we are also going to dissect every region, every district a lot more than before. Okay, so get ready for this informative ride, and we shall begin. Okay, now, all of you ready? Get a glass of water beside you, and a pen, a piece of paper, or just jot down this on your phone. Okay, if there's anything you want to ask. All right, so what has happened in the last 1 quarter? Okay, this first slide should be familiar to all, right? I think one of the most significant developments in the market that affects, I think, not just the lender market, but the entire residential market is the introduction, okay, of yet another round of cooling measure in the form of increased additional stamp duty. All right, I won't go through the details, but you can see the increase is quite significant, all right, even especially for the PRs and the foreigners. Now, this is quite interesting because when this came out, a lot of people have different thoughts, you know, saying that, oh, Singaporeans, anyway, landed properties can only be purchased by Singaporeans, foreigners come by, so the impact will be limited, right, with this school of thoughts. We also have others who say that, hey, this will then affect basically the demand for, let's say, condos, and if the condo owners can't sell these high-end properties, then they can buy landed properties. All right, so there's a lot of talks, right, going around. The exact basically said impact, I think, on the residential or the landed market, I think is still not so clear, but we have seen certain reports in the past that actually the number of the condos, for example, purchased by foreigners have declined, all right, significantly. So as to how much that will affect the landed market in terms of the flow of the capital back to the landed market, we are getting to feel, okay, to see some impact, and later I'll share with you, okay? But more importantly, okay, after a generally quiet so-called quarter compared to the first quarter in terms of the number of news, this is a very fresh, just came out last Tuesday. Okay, you're seeing this. It's a flash report nonetheless, basically published in both papers, that Singapore private home prices for the first time, all right, in 3 years have seen a dip. Okay, although the dip is very little at only 0.4%, but it's still a dip after many successful quarters of increase. Without going through all the details, what is important to take note here is that the index that's mentioned is called the private property, so-called index PPI. Okay, this one, the way it was used, okay, before I go into that, okay, this is the, pardon me. Okay, let me just go to this one, right? This is another report, and among the reports, it was stated in the content that landed properties actually gained by 0.1%. Okay, gained by 0, almost flat. It is almost flat. Is that good or bad? Before I go into that, just want to clarify on the index that was used. Okay, right. So this is the PPI. Okay, our landed properties, and this one is slightly different because they actually use a base index, and what was used is actually the median price. Okay, the median price transacted across a certain period. So if there were, like, for example, 11 properties sold, they take the results of the 6th property, right? Something in the middle, in order to get all this index. So this, to a lot of consumers, may find very difficult to understand because it's not expressed in a way that we usually see, either in terms of URA data or what you see on the market or being advertised, okay, which is per square feet or volume, so to speak, right? So with this, all our data actually uses a different index using data from URA, and then we actually use the per square feet, okay, it's per square feet based on land to compute all the data you're going to see coming from now onwards, all right? Therefore, there may be some difference, even though overall general line is similar, but in terms of the expression of the index might be slightly different. Okay, we just want to clarify this because a lot of our followers have asked before, why is there a discrepancy? Okay, so now let's come and take a look at basically the overview. With that, if you see a decline there, the next slide should not startle you. Okay, if you still recall, this is what happened in Q1. All right, Q1, there was a new record set. Okay, and after that, a first decline. All right, this is the first decline. We were at Q1 here. Can you all see my arrows? Okay, good. All right, after 9 consecutive quarters of growth, and the exact decline in terms of magnitude is actually minus 3.4%. After hitting a high of 1,009, okay, crossing 1,009 per square feet island-wide, all right, the price has actually dropped to 1,840, okay, minus 3.4%. In terms of volume, we actually have felt it in terms of transaction volume. The last quarter has continued to decline after, it's actually since COVID, since the high in end of 2021, the quantity fluctuations has been quite bumpy, as you can see. All right, basically all the bars reflect the exact quantity sold as a total market as a whole. So with exceptions in Q2 and Q1 this year, other quarters are actually seeing downward change in a sense. So Q2 has not been a good quarter. The volume actually declined by 13%. Right, 13%. And if you compare a like for like and to adjust for seasonality, it almost dropped almost half, more than 44% compared to Q2 of last year, which was, if you can see, it's almost a high, right, compared to, within the entire 2022. Okay, so this is what we meant by in the header, right, in the headline itself, which is the change, right, the tide changing finally, because you've been following us for the last quarters, if not years. We have been anticipating this, especially in the last 1 to 2 quarters, when we start to feel there's a lot of downward pressure in terms of volume. All right, finally, this has arrived to basically adjust for all the downward pressure by the volume. Okay, and the purpose today, of course, is to take a look. Okay, we start to take a look at this annual volume. All right. So this was basically based on quarter. Is this all doom and gloom? Okay, if I were to let you take a look at the last many years, all right, from 2010 to now, you can still see that volume over here. All right, of course, this is based on the first half, just 2 quarters. It is still at all-time high. All right, all-time high of almost 1,009 if you average out basically the entire 6 months. Compared to the last so-called record set in 2022, we're barely at 1,007. So this year is still considered a very good year in terms of price. Okay, in terms of price. In terms of volume, we're barely about 600 units. If we were to extrapolate this to the rest of the year, we're probably going to get about 1,002. Now, 1,002, if you look at the past many years, okay, we're probably going to hit towards the bottom right of between 2013 and 2016. All right, those are basically the lowest and slowest years in recent times. All right, in the last decade or so. All right, so what is interesting now is what's going to happen in the next 2 quarters or the rest of the year in terms of volume. Is it going to help to sustain so that I could give an upward lift to support basically the price increase, or is it going to pull everything down like what you see, for example, in 2014? All right, so value is still all-time high, and then volume is almost the lowest as mentioned here. Okay, so it's not all doom and gloom. Okay, it's not all doom and gloom. The interesting thing here is if we come back to the slide focusing on the quarter, is that when there are fluctuations, this is a line caused by hundreds of transactions, almost 300 transactions, right? 276. Wherever you are staying now, whatever house you are buying or thinking of selling, do you think you are affected in the same way? Okay, the answer is obviously no. That's why today we're going to understand, really dive deep down and understand all the transactions, right? Not just in Q2, but also in Q1 as well. All right, for us to basically have a much clearer picture and to derive a certain learnings and so-called summary points from there for us to move forward. Right, everyone following so far? By the way, this is going to be a very numbers-filled chart, so get used to this. All right, so trying to focus, don't worry about too much of the numbers that precedes what's basically the recent ones, and try to focus on the changes, right? All the columns here. that will give you indication. The exact number, it may not be relevant to you, whether we are selling 300 units or 276 units, okay? Right? Okay, so that's what I meant, the turning point. And I've just answered this question. Not all houses are affected equally. So if you're a seller, if you're a stakeholder in any way in the Singapore landed market, the rest of this seminar should be very insightful, all right, to you, as it is to us every time we digest the numbers. Okay, let's first take a look. All right, one way to dissect the market is to understand between the different segments, the different house types, okay, between the terrace, semi-detached, and detached. What can we derive from here? So we have seen basically just now the price, the value decline, right, 3.4%. But you can see from here that among these three, actually terrace increased and detached and semi-detached showed a decline. In fact, semi-detached is the one that pulled down the entire value the most. All right. So let's do a quick exercise. We'll just leave it there for a few seconds. You don't have to digest this too much. Just understand this. Basically, terrace has gone up, semi-detached has gone down. All right, as to why later we'll take a look in a while. Now, this is value. If you take a look by volume-wise, if you are marketing, selling, you feel that certain segments are a bit slower, this could give you some insights and revelations. First, we saw terraces. Actually, again, this is quite similar. All right, terrace actually declined the least, by only 7%, followed by semi-D and detached. They have actually swapped position. Just now, detached semi-D was doing worse in terms of volume. All right, but by and large, at least it's consistent. All three house types contributed to the overall decline in volume. All right, and of course, if you compare to last year, you can see almost everything declined between 30 to 70%. Okay, so do we see any pattern between these two charts? You can see quite clearly, right? The one or the better performing is actually terraces. Okay, terraces generally are still performing better than semi-detached and detached. Okay, we still see now we are on the field. We still see a lot of so-called upgraders from condos, from HDBs buying their first in the terrace. This could be new demand that is not related to what we call the pandemic caused a surge in demand. All right, so this is helping to keep basically the volume afloat, and hopefully the value as well. So that's first conclusion. Now, how about tenure? So, landed properties are divided into the freehold, 999, and 99, knowing that 99 forms a minority part of it. So can you make a guess whether 99 or freehold did better? Our team and I, we tried an internal guess, and I myself, I was wrong, okay, partly because I didn't do as many 99-year landed as I would like to. And my prediction was that 99 would have the fared worse, okay? The reality cannot be further from the truth, okay? You can see from here, for 99-year leasehold landed, in terms of volume-wise, actually only dropped by 2%, okay? Only dropped by 2%. It's the most flat, from 56 units to 55 units. Whereas for value, it actually went up the opposite direction of the overall market, okay? Instead of declining, it actually increased by 3.3%, crossing almost 1,005. Now, this is a new high, all right? Not too long ago, we are seeing 99-year just barely crossing the $1,000 per square feet mark. And now we are crossing 1,500 square feet. Okay, later as you'll see, one of the reasons about, I think, affecting lowering of affordability is that a lot of buyers, or more and more buyers, are becoming more and more open. All right, maybe in the way that they receive 99-year condos, I think this kind of open-mindedness has also reached the landed market as well. Of course, affordability is one main reason. A lot of the landed properties, they are freehold, 999, moving condition. You want 3 stories, for example, for even an entry-level terrace will now cost you 3.5, 3.8 and above. Whereas equivalent 99-year could save you, for example, about $1 million. All right, we have been seeing quite a lot of discount buyers, and I think there are the reasons why this chart exists. Okay. Next, freehold 999, which of course formed the bulk of all transactions, more than almost 80%. You can see 222, right? Based on that, so this reflects mainly the overall direction, minus 15% and minus 4%. Okay, not surprising. So conclusion number 2 is that 99-year leasehold. By the way, 99-year also includes the 103 years, includes those that have 50 years left, 30 years left, etc. They do form the bulk, but we still group them under 99 years. All right. So they are performing better in terms of both value and volume. All right. Than the 999 and freehold. If, of course, now we hope if only the proportion of the 999, of the 99 years is a bigger percentage, then actually the uplift will be even better. right? But with the majority still being contributed by the freehold and 999, unfortunately, the whole decline is being dragged. Okay. Next, let's start to compare landed versus strata landed. By the way, I just want to explain again, the charts they've been using actually excludes strata landed, right? Excludes strata landed so as to not confuse the perception or the interpretation of the data. Main reason is because strata landed does no land, they only use the built-up area, whereas landed, the houses that we always see, they were actually using the land size. All right. But if you were to understand and split this up, strata landed and landed, what can we see? Right. So these are all the strata landed. Okay, strata landed, can you see a pattern? It has actually shown, okay, value has a drop, minus 1.5, it's almost flat, right? But what is surprising is that we see a 30% increase, right, in the volume of strata landed properties being transacted in Q2. So this is probably one of the highest numbers in terms by any subcategories that you will see in a while. Right? If we are still using the same principle of perception of the affordability, we all know that strata landed, they are also lower in price. Okay, low in price. And if you remember in June, there was a big this launch in District 10. All right, there's basically strata landed, and it's all over in the news. Other news, what's the name? 11 in Holland. That's right. Yeah, 11 Holland. So that itself contributed, I think, make up the difference in that. Okay, but any rise in terms of a segment always gives a positive impact on the entire segment as a whole. Okay. Okay, so this is what you see. So strata landed houses are actually performing better than landed houses. Okay, we can go, those who have seen 11 Holland and those who are marketing it or are active in 10-11, I think can draw into reasons why that is so popular. But one of the reasons, of course, it has a lift, if I'm not wrong. Yes, there's a lift, and also the price point is very affordable. Again, once again, you keep hearing this word affordability, right? This is going to be one of the common themes that you can hear for the rest of the webinar. Okay, so there are buyers, like you said, as long as the price is right. Okay, next is new versus resale. This is a bit of an interesting comparison or against, I say condos, right? Condos, we always monitor the new ones. The new ones actually contribute to a big proportion of the total condo market. In fact, the price, a lot of people are monitoring the new price and the effect, to the extent that people are now saying, just now the report there, so you saw the decline was because the launches, the prices of launches in Q2 are significantly lower than the launches in Q1. All right. Do we see the same in landed, all right, versus resale? If you do understand that new houses form a very, very small percentage of the total landed market, you will know that the impact will be very, very minimal. So let's take a look at resale first, which forms the bulk, okay, more than 90%. In fact, basically resale houses. So the numbers here should not be alarming, right? It's basically the trend of the full market in general. But the new houses, now, can you see all the greens again? Right, all the greens again, quite similar to certain patterns that we saw. Okay, although the value has dropped, right, minus 12.3%. In fact, it has dragged down the volume, the value, but the volume has actually increased by 4%. One main reason for this is, later I think Sean will share with you, is that there's a big proportion of this is contributed by a project called Poland, right, in District 28. I think 10 units out of this 28, if I'm not wrong, of the entire quarter is from this launch, and this is a 99-year landed, so the launch price is actually significantly lower than a lot of freehold 999 new landed houses that you see. Okay, I know we have buyers here who are looking for new landed. We are also marketing quite a lot. We have transacted quite a few as well, and frankly, you can't find anything that's at 2,000 free if it's freehold. All right, a lot are actually now asking at high 2,800 and above 3,000 in the better premium districts. They are even at 3,500 or even 4,000. So please take this with a pinch of salt, or at least understand where the source of the numbers come in. Okay. So this is also one of the reasons why a lot of people follow our webinar, because if you just look at the numbers and you make your own conclusions without understanding the insights behind basically every number that you see, you may form the wrong conclusion and find that maybe this new launch I'm looking at is overly priced, for example. Okay. Right. Let's now go a bit deeper. So now, fourth conclusion that we can see is that new houses are doing better in volume. right? They're doing much better in volume, but worse in value, right? As I explained earlier, is skewed by this just one single new launch, but this is a multiple new launch, multiple unit. It's a big development actually. Which, by the way, I bring a point. A lot of the new launches or new houses here are individual or at most maybe 2 units, right? A pair of semi-detached. So when you have a big development like Poland collection coming in, the impact on the entire market is very, very significant. Okay, so to understand, this is due to that. Next, okay, if I were to summarize all that we have seen so far, okay, again, give you a couple of seconds to digest. So over here, there's a range in terms of this total landed, 3.4 and 13, organized by house type, in terms of value and volume, freehold 999, 99, new, resale, strata landed. All right, this is a repeat of that. Okay, with this in mind, let us just take another look at basically what's some highlights. Let's take focus now on the value, right? Just value, 3.4%. Okay, among 3.4%, the better performance are actually terrace, all right, and 99-year, and 99-year landed. Instead of declining the value like the other categories, they are actually increased. Okay, now let's take a look at volume. Sorry, that is the better performance. The ones that pull basically the whole index down are semi-detached and also the new houses, like we mentioned that. Right now, semi-detached is a very interesting category because we call this a sandwich group, right, between the terrace and the detached. Very often when things like this happen, later you start to see there are certain directions that the terrace and detached are pulling. All right, you see a lot of impact, but when those two categories move, you see semi-detached being stuck in the middle and being held in limbo. Okay, because you don't have enough terrace upgraders and maybe detached downsizers to make a so-called a movement or transaction in semi-detached, all right? And then when you have a drop in terms of volume, that you can see here minus 40%, then the value will also drop considerably as well. Okay. Likewise, sometimes on the reverse, if you see detached and terrace moving much faster, you will see that semi-detached being in the middle will actually benefit from basically the forces. Right. So let's take a look at the volume. Volume we saw minus 13%. This is in spite of the fact that new houses and strata landed, all right, have increased by 4 and 31% respectively. All right, and not so good, 4 and 31% respectively. Okay, so what are some of the highlights that we can see so far? First is after 9 consecutive quarters. Okay, just to repeat again, so that all of us walk away with a lot clearer. More clarity in a sense. Okay, we see a first decline in transaction volume by 3.4%. Okay, the value grew by, sorry, hold on. We'll see first quarter. I think that maybe there's some typo error here, just pardon me. Okay, but actually volume declined by minus 15%. Okay, I'll correct this, pardon my error here. Okay, so but what's important is the second part, which is best performing value are actually terraces. Okay, and 99 year we saw top performing volume are actually new houses and strata landed. If you want to walk away, right, today. The worst performing value is new houses, minus 12.3, semi-detached, minus 9.2. And what you can see just now also is the detached has actually declined by 29%. If I were to go back to just now the chart, let me just see. Okay, over here, yeah, this is the one I was missing, minus 29%. Now, a lot of this, one thing to take note, by the way, our terrace here includes corner terraces. Unfortunately, we can't split that up. In the same virtue, detached also includes a good class bungalows as well. All right, if you've been reading the papers, you know that GCBs have actually declined quite significantly. For the first 6 months of this year, there's only about 8 transactions being recorded versus about 28 last year. So just by GCBs alone, you can see that the entire index was put down, okay, for based on detached. Okay, so that's one way to take a look in terms of the various segments. Now, for a lot of us, especially if you are staying in a specific or you have a preference for certain or eyeing certain districts, the next section will be very interesting. All right, we're going to dissect the numbers now based on by geographically. Geographical, it's not just by districts. We also lump them up together into regions. It gives you a better idea on how, okay, to take a look. So these are all the districts in Singapore. You should be quite familiar. All right. So we call this, just give me a minute. Sorry. So we have the northeast area in blue, central, west, and east geographically. All right. Now we call this the core regions. If you look at basically the circled parts. right, the circle parts. So we have 10, 11 in the central, 21, 23 in the west, east is 13, 14, 15, 16, and then northeast, right, 3 districts. This 11 districts make up more than 80% of all the transactions in Singapore. All right, all transactions. So these are also the reasons why HLD or Huttons Landed Division chose or strategized to focus on these districts, basically in our geographical targeting. Okay, so and that's where I started earlier by saying that usually in our previous webinars, we actually focus on only these 11 districts, all right? Only these 11 districts, because the rest, we either don't have as many clients who are following us based on that, but increasingly, we have a lot of requests. Hey, can you show us something about District 4, for example, Sentosa, 70, 80, etc. So for the first time, we're actually dwelling into the entire Singapore, all the other districts, right? The next few slides should give some so-called insights on them. But before that, can we just have a quick poll? Just share with us which among these districts are you the most interested in? Okay, so the first 11 are basically all those that we are focusing on, and then the rest, unfortunately, we can't list everything down. They're actually under others. All right, others. Let's give a couple of seconds. Let's take a look. Every seminar or every webinar, we have different results. So I think what is very strong here, don't know why 15 and 16 are lumped together. They should be separate. Now they have unfair advantage. 15 and 16 now is about 50%. Pardon me, the poll should be separate. But next very strong second is actually District 10. Okay. And followed by District 19 at about 20%. All right, 20%. Let me see whether I can show the poll. Let me just share this with you all. Can you all see? All right, so these are the results. If we were to split 15 and 16, I'm quite sure 15 is one of the more popular ones. Okay. Just want to understand. Not that we will not focus less, but if you have questions beyond this, just let us know. Okay. So let's go now. If you are intimidated or intimidated by the numbers just now, the next few slides, all right, you may find a bit overwhelming, but again, I'm going to guide you through. All right, very, very interesting so-called findings. Like I think my team and I, we love to study the numbers because numbers always tell a story, right? They tell the story, they tell the reality of what's happening. Even though we're in the market, we can so-called feel, right, the pulse of the market, and we often wait until the quarter or the month is up for us to validate what we see. Okay, let me try to move on. It's a bit stuck, hold on. Okay, all right. There you go. Okay, first slide is on the transaction value based on core districts. All right, core district. Now, this core districts is HLD's terminology. All right, not URA, not whatever. These are the 11 districts that we mentioned. Many, many numbers here that you can see. So I'm just not going to highlight and focus on some. But one look, you can take a look at here. We have our still usual suspects that cross the 2000. In fact, crossing 2000 is no longer new. District 10, District 11, and then you have 15. All right, and then something that's new in District 20. Right, they just joined the foray of crossing the 2000 per square feet. It's a new thing. But the key thing is the change. All right, what's the evolution versus the previous quarter? Okay, so first you can see the top performers are in District 23 and District 20. Okay, District 23 and District 20. One main reason for District 23 is that basically this is an outlier effect. All right, the numbers were skewed because in quarter one, there were some transactions that were exceptionally low in terms of the latest interest rate share you. They are actually less than 50 years, right? So if you look at it, actually it should not be 1,003 here by right. Okay, so it appears exceptionally high. And then you have District 20, you see a lot more terraces being sold this time round. Later, Sean will share a view that contributed to a higher PSF. Okay, and then the worst performance in terms of growth is District 21. Now, 21 and 23 actually share a opposite fate. One had a lower previous number, and then this one actually had a higher previous number. All right, previous result. 2000 plus here in 2000, quarter one was actually exceptionally high due to a couple of launches. The later Cedric will share with you. And District 16 actually showed a decline, all right, minus 10%, back to the 1,003 mark. Okay, so what is very interesting here is put as a disclaimer as well, so to share with you that do not be alarmed by this, all right? So if I take away the 23 and the 27%, by and large, the other changes are actually within the single-digit range, which means there is no cause for alarm. All right, there's no cause for alarm because it's just a quarter. And for some of the districts, although these are the top districts, the volume may not be high enough to effect or to show a consistent so-called pattern across the year. Okay, so this 5 is to show you because these numbers may alarm you, but I'll let Cedric explain in a while later in terms of the action. Okay, so this is a new chart that's fresh, even if you've been a follower to us, is we track the transaction value of also the non-core districts. Okay, non-core districts. You can see some districts are omitted because there's no landed properties like in District 1, District 6 and 7, for example. All right. Again, many numbers. If you just look at this first, you will have the most familiar will be Sentosa at about the District 4 area, almost 2,000. It actually fallen back. Is it partly due to the cooling measures that actually, because Sentosa has been attracting a lot of interest with the influx of the foreigners recently in the last 1 to 2 years. Okay, we thought the 2003 would continue and perhaps even rival, right, the prime districts in Singapore. Unfortunately, now it's fallen back to minus, so less than 2,000 per square meter. Okay, we have also at District 8 to 18. Okay, 18, this is an outlier as well. Let me see what's the highlight I see. All right, you can see actually a lot of the District 17, 18 on the eastern side, and then we have the western side, District 22, 25, etc. What is interesting is that despite this being non-core, all right, less popular, you can also see a pattern, again, with the exception of District 18. This is at the Pasir Ris. There was a newer house that's being sold. Otherwise, they are all in the 1,001 range. The rest of these are actually, okay, lower than 1,003, 1,002. They are actually the more affordable, right? More affordable ones. And yet, you see an increase in terms of the value, okay? Increase in the value. If you remember what I said earlier about affordability, some buyers, right? Because some buyers have because of the rise in prices beyond. If you take a look at this slide again, can you find anything that's like under 1,003 with the exception of District 16? All right. Later, of course, Michael explained to you, even this is caused by 99-year properties. If I take out the 99 years, the freehold and the 999 will be easily crossing the 1,005 per square feet. Compared to, right, the non-core, they are generally a lot more affordable and therefore perhaps have more room for growth and attracted a lot more value seekers and those affected by affordability, all right, to come and purchase these more houses in these districts and cause the value to increase. Okay, that's so far. Okay, next, let's take a look by transaction volume. Okay, again, many numbers here. Here, how we have organized is the 11 top districts here. We have classified them by regions, all right? Just not by the same regions you mentioned. So we have Central, West, etc., easier. And then the rest put under non-GTA. So from here, you can see that, let's take a look at the Central regions has recorded minus 40%. Okay, because 10 and 11 has dropped significantly, just as I mentioned, partly a lot due to GCBs. West region has dropped, East region has dropped. And what has actually grown very, very starkly, all right, is the Northeast region, with District 19 posting flat in the challenging quarter. 2028 have actually reported very, very strong growth. Okay, so next conclusion or highlight you can take away is there's a rising popularity in Northeast and the non-core regions. Okay, non-core regions. Why is that so? Okay, Northeast region, I'll let Sean explain later, and non-core region, we probably have contributed that to basically rising affordability as well. Okay. Okay, next slide. This is new. We call this the top five ranking. All right, top 5. Just pardon me. Just hold on. Let me see whether this move. Okay. All right. So are you all seeing all 3? Okay, because I'm some animation. Okay, so let's start from the top first. Yeah, let's start from the top. We have basically this organized by terrace, semi-detached, and detached. Okay, not to confuse you, let's go one by one. We have first here the volume. So from here, you can see terrace, the top 5 most popular districts for terraces, where most terrace seekers go to, District 19, 20, 28, etc. Not surprising. Okay, so then we have the volume growth versus the previous month. Okay, sorry, previous quarter. So we rank them as well. Note that if you are top here, does not mean that you are top. You will actually rank in terms of growth as well. All right. Next, we put the value in. So here, if you're quite familiar, you can see that these are the most prime districts, 9, 10, 11. All right. And then you have 20 and 15. And next will be the value growth. If you understand how the numbers are organized, this is repeated for both, pardon me, semi and detached. All right. Too many numbers here, don't worry. You can keep this, scan this, you can read and study all the top 5. But if you can walk away, at least you can understand which are the top most popular or most expensive semi-Ds, for example, island-wide, right? You can see the basic rankings here. The takeaways, okay? Number 1, you have District 9, okay, crossing 3,000, right? This is now the most expensive district. It has been crossing 3,000, a so-called on average, all right? Mind you, this is on average, not because of some new launches. And let me, can you see? Okay, right, at more than 3,000 per square feet. Is this going to be the norm? And is District 10 and 11 catching up, especially the new launches? I think time will tell, but it's definitely moving towards that direction, right? So if you are familiar with condos, crossing 3,000 per square feet in District 9 is not uncommon, all right? So if the landed so-called property prices follow the condo patterns, you will see 9, 10, and 11 actually reaching new heights quite soon, right? Next, what's interesting is that you can see a lot of discrepancies, right? Different patterns here and there, but one district that stands out in terms of volume, and both volume and volume growth is District 20. Okay, District 20, frankly speaking, there are not many terraces there, right? Not many terraces, or as a whole, the supply is quite limited compared to the other bigger brothers, so to speak. So for District 20 to get a number 2 spot in terms of terrace transaction, it is a very interesting phenomenon, okay, that push both the value growth, all right? Next, if you go to semi-D, okay, you can see semi-Ds here, you have District 13 and 14. Okay, 13 and 14 recording the highest growth together with District 5. So 13 and 14 are the brothers. Even within HLD, we actually manage them together, right? Posting more than 33% and also a 200% growth. And at the same time, you look at the right, this increase in volume has also contributed to the increase in the value as well. Later, Jason will share with you our IC why you can see District 14 crossing like $2,000 on average, all right, for the first time. Okay, and also District 13 pulling himself out from the sub $1,000 rut into the Q2. Pardon me, this should be Q1 and this Q2, right? And then now let's go to detached. Detached wise, this is an interesting finding, because if you are familiar with how detached transaction volume goes, you always have the central region, District 10, 11, taking the top spots all the time. All right, all the time. This quarter, we have District 15. I won't say the new kid on the block. This has always been the most prime and popular district out of central region, right? Claiming the top spot, okay, of the most popular district or in terms of volume for detached, all right? This is something that's very unusual. Again, that's because of a decline in GCBs. That's one of the main reasons. Okay, and then in a more value growth wise, you will see outskirts like District 27. Okay, also a very unlikely candidate to register the highest growth from 1,000 to 1,008. Right, almost 70% growth. Again, one of the reasons why we don't analyze the non-core districts is because of the limited volume, right? Limited volume, limited transaction. So any transaction in those districts will skew the entire district's result. So, for example, for this was actually caused by a sale of a detached house, all right? A brand new detached house that's smaller in size, that's less than 3,000 square feet. And therefore registering a very high PSI. This house, by the way, was sold by HLD, right? Was sold by HLD. So that caused the increase, sharp increase in value. Okay. And then you have next District 10, right? Volume growth, again, due to the GCBs are one of the reasons as well, right? It's actually registering a very, so-called, let me just say minus 40%, yeah, non-promising growth, all right, or very negative growth in this. If you notice for the volume growth, everything is there, with the exception of the top 2. These are all ranked, by the way, right? The rest have all declined, right? The rest have all declined. So the best performance is 4, but it's only a 1 unit increase. And then we have District 19, which means the rest of the districts all reported decline. Okay. That shows how consistent or how weak quarter 2 has been compared to quarter 1. Okay. Clear so far? I hope this is this new slide or this new comparison data will give a clearer view, okay, in terms of the top 5 districts for the various house types in Singapore. Now, another way that we can analyze the data to understand how the two numbers, right, the 3.4 and 13.5 was derived, is to understand, beyond actually those two numbers, is to understand the average price. Okay, so understand the average price. So for example, you would buy a house or a house that's in District 10 now, the average price now is 10 million. All right, average transaction across all house types is about 10 million. All right, so average price, and then there's also the average size, because this is a very clear, a very interesting indication of what are people buying or what have been sold so far. Just one glance, you can tell, right, which are the districts which are more affordable just by pure sizes. You see a lot of 2,000 plus square feet, all right? Then you see big jumps in District 21 and basically the prime districts where a lot more bungalows are located. But for the rest of the more non-central districts where terraces and let's say semi-detached form the bulk, this will be the average size. Okay, you see a similar pattern in the non-core districts. Okay, with the exception of District 9, again, it's prime district. District 4, Sentosa, considered prime if you talk about the number of bungalows there. The rest are still 2,000 plus. All right. So the first conclusion you can see basically core districts, the average is about 3,003. All right, average price is 6 million now. Is a drop in price of 9%. The size have actually dropped. People used to buy, average price size was about 3,006, now it's about 3,003. Okay, so people are buying smaller house. The rest here, others, this is also a similar pattern, minus 23 and 10. Total Singapore average price is minus almost 10% and 10% respectively. Okay, what is one pattern you can pick up from here? Is that, all right, transactions are getting smaller in both definitions. All right, that means smaller houses have been transacted at lower quantums. Right, smaller houses have been transacted at lower quantums, regardless of the PSF. Okay, this has to be read or interpreted independently from the PSF. Okay, hope that gives you a clue. There's two exceptions. First one is the prime district. Okay, prime district, you can see with basically almost a sea of red, right, in the prime districts. Pardon me. Sorry, in the core districts, District 10 and 11 are registering an increase in both average price and size. All right, so you can see from District 10, what was 9 million plus, now it's $10.5 million. Okay, District 11, 15, now it's 19. All right, $19 million. Of course, the fluctuations in prices there are high, but both districts are active districts. Okay, so they kind of there's less occurrence or less impact of outliers. All right, mind you, just now we just concluded certain things. People are going for smaller houses, right, more affordable. Yet at the very top end of the landed market, right, the rich are still buying, or the more premium houses are still being transacted at higher price at larger sizes. All right, can you start to see a certain pattern in terms of the polarizing effect of this very unique quarter? Next exception is the non-core districts. Okay, non-core districts, which we have not shed a lot of limelight on, but you can see that a lot of non-core districts have actually gone up. Just now we saw some of these districts recording higher PSF. Now we are seeing that they are recording also higher average price. Okay, I take for instance like District 17. Okay, this one is at Changi area. What used to be 2.8 million, now it has crossed the 3 million mark, even in Changi, which by the way consists of a lot of 99-year houses. All right, so that's increased by 8%, and the average size has also increased as well. All right, there are other more significant ones like District 25, etc., which I will go to the details. Okay. Two very polarizing, very interesting spectrum, side of the spectrum, and they're moving in the same direction. What does that tell you about the very complex landed market in Singapore, even within a quarter? Clear so far? All right. 7 conclusion. Next, another way, if you were to summarize all the numbers together and start to put all transactions by price range, you can see here, right, left side. right? We start to put all the transaction by price range, and we take a look at how many of such transactions were recorded in the two respective quarters. Can you see a pattern now? You've been trained by the previous slides. All right, so I give you an example. So let's talk about the 8 to 10 million, all right? 8 to 10 million range. It was 17 before, now it's 8. Therefore, the volume has halved. All right, average PSF at 8 to 10 million houses was 2,000 per square feet. It has dropped slightly, okay, by 4%. All right, to be here. And then the average price, what was 8.7 million, now it's 8.6. Basically, this is one of the more so-called stable range. All right, now it's -1%. This is how you should read the chart. Okay, if I were to put everything together, what are some of the findings you can find? Okay, can you see the blues? All right, there are only 3 blues, they're all red. Okay, the first two blues, the growth are actually in the 4 to 5 million range and below 3 million. All right, below 3 million. If you were to recall the last webinar, we were actually saying that below $3 million transactions are basically almost being phased out. All right, except for the 99 years that's holding them up. Okay, this quarter, we actually see a surprising increase, a big turnaround in terms of volume, average price, and average PSF. Right? So, and is that affordability so-called a sign? Okay, I can't think of better reason. All right. Next is the 4 to 5 million mark. Again, if you try to recall the previous webinar, the two price range that recorded the highest growth is actually 5 to 6 million and 6 to 7 million. Right, these two are the ones that recorded the highest growth. 1 quarter later, they have actually stepped back by 1, if not 2 levels down, and you see more of the 4 to 5 million transactions posting growth instead. Does that mean that a lot of buyers who used to have $5 to $6 million budget are now buying the lower ones, all right? Or are just there less buyers willing to bite in the 5 to 10 million or not to 20 million mark? Okay. So if you were to lump everything together, group things and make it a lot clearer, okay? If I classify the under 5 million, 5 to 10 and above 10, the picture is a lot clearer. Okay, you see a lot of red, right? So basically 5 million and above, 5 to 10, above 10, they are all negative, right? They are all negative. Their share used to be, this is 34%, now it has dropped to 28%. Above 10 million was 14%, now it's dropped to a mere 10%, right? When we were thinking that there'll be more and more above 10 million houses sold, okay? It has actually reversed in this quarter. Now, the very interesting thing that has been consistent so far is under $5 million, all right? The proportion has actually increased, okay? The volume has increased by 2%, and it's a 10% increase from 52% in the previous quarter. Now it makes up more than half. All right, almost 2/3 of all transactions now are under $5 million. Okay. The only exception, okay, is the high-end 20 to 50 million mark, right? That basically showing increase in all areas. So the prime districts are still not affected, as we are seeing. Okay. So eighth conclusion that we can draw is a very polarizing results. Okay, basically, is the affordable are growing and the premium houses are also growing as well, leaving those in the middle to basically, I will use the word suffer, what is a better word? To basically be affected, right, by all the factors we are seeing now in the market, okay? So what are some of the highlights you can see? We were at this first 3 points before. Now, next is, you can see, just to summarize, the best performing districts are District 23, 27, and 20, right? Plus 27, 12, 10, respectively. In terms of volume-wise, we saw Northeast region, okay, plus 17%, okay, and West region as well. All right, oh, sorry, and a varied price growth in West region, just now we explained, okay? The last point is the most important, is that the houses with smaller land size and more affordable quantum grew in popularity, with the exception of the very high-end ones, all right? So far, so good. Is it clear for everyone? Okay, if not, now let's go. If you think this is a good so-called insight, are you all ready now to go even deeper, right, into the various regions and districts. Okay, and this is where I introduce my team of leaders. Okay, who will come and share with you. Again, this is a slide you saw before. We are first going to start with the East region, right? East region, and with this, I have District 13 and Jason to touch on District 13.
Thank you, Willie. Yeah, good evening. This is Jason here. Yeah, let me share with you more on District 13. Okay, before that, just a quick glance on the segment for District 13. We have actually Brother Height, CNET, McPherson Garden, and McPherson. Majority of the transaction actually come from CNET and Brother Height, but you'll see some changes this quarter. Yeah, we'll share you more. Okay, so hold on a minute. Okay, for the first one, what we are seeing there, okay, overall, we are seeing the transaction drop as what you have actually highlighted by Willie earlier. Generally, we are seeing a transaction drop in quarter to quarter, and also year on year, quarter two, at least 14%. So number two, we are seeing actually drastic drop in transaction. As what I mentioned, normally transaction come from Brother as well as CNET. But this time around, we are seeing the drastic drop in Brother Estate. As you can see, usually we are seeing about between 6 to 8 transaction volume on each quarter. But this time around, we only see 2. And 2 of them, one of them is actually the terrace and the other one is the detached. Yeah. Next one to share with you. Okay, you can see also the drop in the detached as well. On Brother Height right now, in comparison with this what we call volume, we are seeing a drastic drop in the detached. Yeah. Once again, every quarter we are seeing about 3 to 5 per quarter based on the last quarter. But now we are only seeing 1 transaction, which is a huge bungalow, as you can see, and can be subdivided into 3. Yeah. Next, we are seeing on the price, on some pricing on terrace. We are seeing the average, as you can see, the average value, the sales value and the PSF, there's what we call mixed reaction. On one side, the price went up, but on the other side, the PSF go down. Yeah, especially on the what we call the senior estate side. These are mainly contributed from the terraces, small unit, the small unit side. Yeah. Okay, a last pointer for the D13 is you can see the major transaction value right now. We are looking at for this quarter as compared to quarter one. Majority of the value right now hovering between the range of 2 to 5 million, 2 to 5 million kind of value as compared to the last quarter. As you can see, we are still seeing something 6 to 9 million. But this time around, quarter one, the prices actually most of them reduced, and also because not much from the semi-D, mainly terraces. So we are seeing the price hovering within that kind of range. Yeah, that's all for me for D13, District 13. I will continue with District 14. Again, before I proceed, here is the segment for District 14. As you can see, Kembangan and Geylang, these are the 2 major districts. Again, these are the major contribution, especially the transaction mainly from Kembangan. Very little from Eunos. Sometimes even per quarter or 2 quarters, we don't see any transaction at all for Eunos. Last quarter, we see a lot from Geylang, but this quarter, you can see, let's find out more. Okay, in contrast with the what we call D13, D14, we are seeing some incremental as compared to the last quarter. The last quarter, we have been seeing a downtrend, but this quarter, we are seeing an upside from about 30%. Yeah. And majority come from terrace, what have been highlighted by Willie earlier. Okay. On the other side, we are seeing a sub drop on semi-D as compared to year-on-year Q2. We see last quarter, 2022 Q2, there's a 21 transaction and semi-D covers 8 units. But this time around, we only see 3 units for semi-D. That's a very sharp drop of 63%. Yeah. And these 3 semi-D, mainly 2 of them are brand new. That's why, as mentioned, highlighted by Willie, there's some price increase compared to Q1 and Q2. There's a sharp increase. That's majority from the semi-D price, mainly from the brand new semi-D. What we are seeing right now on the average price for D14, we are seeing the price hovering between 3 to 5.9 million, which covers almost 70% of the total transaction. And I have shared with you more. These are some of the so-called houses that you can see. It's between the range of 3.8 to 4 to 5.28, and mainly from terraces. Mainly from terrace. Next to highlight was the transaction ranging. The transaction for the PSF right now in D14, as you can see, covering more than 60%, hovering between 1,004 and more than 2,000 PSF. Yeah, as compared to previous, we are still seeing like 1,005, 1,006. It seems like there's a drop in the PSF side on D14. Last pointer to share. You can see the PSF for terrace. PSF for terrace, you see a sharp increase, especially on the smaller land size on terrace. As you can see, this one is only 1,004. This is corner terrace 2002, but this is basically quite new, come with leaf. Yeah, and this one is a smaller land size, 1,005, and we are seeing the PSF crossing 2,001 right now. Yeah, that is the trend for the vertical terrace, especially in D14 smaller land size. That's all for me for D14, District 14. I'll pass on to District 15. Thanks.
Thank you, Jason. I'm Justin. I'll be presenting you or bringing you 5 main highlights for District 15 tonight. Now, before I dive into the numbers, I would like to bring you so that you have the same perspective when you look at the table that I'm going to show you later. We actually dive it into 4 segments. First is Katong on the left, and where the road dividing the Katong in Chucha is the Tanjung Katong Road. And next will be Teluk Kurau, divided by Steel Road, then Siglap Park Connector, then on the far right will be the Siglap area. Now let's take a look at the chart today. For the first highlights, sharp decrease in transaction would lead to drop of PSF. Now take a look at the right-hand corner. You see all the volume has dropped, like what mentioned earlier by Willie, for the whole, even for the whole Singapore. Nothing surprise for District 15, but nevertheless, you look at the whole 3 categories of the houses. Detached has the least drop by only 10%. And compared to the same quarter in the same year, it's only 18%. Nevertheless, if you look at terrace and semi-D, is the one that has about 36 and 43% drop respectively. Now, would this drop in transaction leads to a drop in PSF? A lot of actually buyer ask about this question, or even some of the seller was actually also say, oh, there's a huge drop in transaction. We all recognize that, but how about the PSF? Nevertheless, for District 15, the PSF is holding very well. If you look at the quarter, it's actually increased by 4.3%. But needless to say, if you look at terrace and semi-D are the one that has the PSF increased by 7.1 and 11.1% respectively. However, if you look at the detached, both value and the PSF dropped. I'm going to share a bit more on detached on my next highlights. Now, maybe just take a few seconds and look at the PSF and the value of in District 15 again, right? Now, second highlights. So early on, I talked about the drop in value and also PSF of detached house. But would there be a price corrections? Because as I shared earlier, the drop in transaction volume for detached is the least, only by 10%. So which means there are demand for detached houses in District 15. But there's a drastic drop in value by 32%, 32.3%, and also for PSF by 7.7%. But would this be a collection? How would we see the value of the detached houses in District 15 moving forward? But before I show you some of the transacted houses, let's take a look at detached houses in 4 various segments of District 15, which I mentioned earlier. We have Katong, Chucha, Teluk and Siglap. And we all know that Katong actually always top the chart because it is the most prime and also it has the most bungalows, number of bungalows in District 15. Now, the value has dropped like 45.4%, which is quite a lot, about half. Not to mention also the PSF dropped by 12%. But this actually leads to a few transactions that actually skew the number. I'm going to show you later on. These are 3 transactions. Take a look at the Q1. We have 51 Wilkinson sold at 2001 PSF, just purely by land. So which means the land cost now in District 15 is actually about 2000 to 2001, 50.5 million. Is showcased in newspaper. And secondly would be a brand new detached houses that sold for 91 Goodman Road, sold at 3396 PSF, which is very, very high. Now, if you were to ask me what are the new detached houses that was asking now in District 15, especially for Katong side, I can tell you every one of them are actually asking above 3. So back to question whereby whether there's a price collection for detached houses, right? If I leave all this number out for my analysis, actually I see a very steady prices was transacted at about 21224 for a resale detached. Now Q2, as you can see earlier, there's a drop in PSF, right? Also because due to 22 Laxale Streets, which was sold transacted at only 1006 PSF, which is relatively low. This house was in the market for 3 years. And when it first started like marketing, they're actually looking at about 28 million. Then slowly actually they adjust the numbers down. Now they actually transacted at 1006, which actually bring the total PSF down for the detached houses. And also the volume. Okay, the next highlight I'm going to bring you tonight is some of the buyers ask about they actually prefer brand new terrace, right? So interestingly, if you look at the terrace house now, average price for terrace in District 15 is already close to 5 million, and it's still on the upside, like 6.9% increase. Likewise, for the PSF also increased by 7% to 2003 now. But what would the price for a brand new terrace out in District 15? Is it out of reach? Let's take a look at this two, which was transacted both in Q2 at 6.35 million. So the PSF looking at about 2003 to 3003. So likewise, no brainer. If you look at some of the house in the terrace for a resale, built up 3-story, the price would likelihood to be, the PSF would likelihood to be within this range. I will show you a bit more later on. What are the houses that we are also marketing that you actually can take a look at it. You can make your own some comparisons. So back to my question, back to this question, would this outreach? But there again, even though at 6 million, but are people still buying? Because I think a lot of like people, construction costs are high and also the timeline. So many of them also prefer a brand new. So if you would like to know what are the brand new houses or terrace houses that are marketing, you can actually ask the agent that bring you here tonight. They will actually can share with you more. Okay, and then number 4 highlights I'm going to bring about is actually terrace. Terrace houses has been the most transaction in District 15 and likewise for the rest of the Singapore, right? So this terrace houses has been like, although it's dropped by 36%, but compared to the same year, Q2 is by 58%. Nevertheless, let's take a look at this subzone. This falls zone Interestingly, in Q2 to Q1, C-Club has the most transactions in terms of terraces. It's actually weighted 41%, but in Q2, Chuchat actually has the most transacted terrace houses. So why is that so? Actually, if active buyer looking in the market, you would know that C-Club, the stock is actually running very low. So people are, and also because of the PSF, like I shared earlier, it has gone up quite a fair bit. So people are looking out to other areas like Terukura and Chuchat. Now, let's talk about Future. What are the houses that we have? Okay, you can actually take this, for example, we are marketing this 39A Carmel Road. It's a 2,000 square feet land, very comfortable, 4-story. I mean, four bedrooms, very comfortable 2-story houses, something that you usually can consider for 4.38 million, only 2,001 PSF. Likewise, if you think like, okay, I want something that is 3-story, you want 5 bedrooms, we also have something like that. It's 1,009, which is very close to 2,000, renovated, northeast facing. And of course, if you say, okay, I want more bedrooms, we also have something, this house called 249 Ona Road, right? We have actually 8 bedrooms inside this house, very squarish, and it's all built up. So you don't have to worry about construction costs, timeline and all that, you can just move in. And lastly, we also have something that we can share is like this house was very newly rebuilt and it has a lift. So people like prefer to have lift. This is some of the options that we have. So again, so if you'd like to know more about these houses, you can actually always contact the agent that bring you here, invite you here tonight, and we can actually show you some of the houses here we have. And last but not least, my fifth highlights for tonight is about detached houses. Like I mentioned earlier, the value has dropped. But again, if you look at the chart earlier that Willie has shared, District 15 has topped the chart with 9 transactions for detached houses, right? So, but the interesting question is, what are the land size that actually are people interested in, right? So this will give you a bit more a sense about what the land size. So I'm actually picking up of 6,000 square feet because I got a lot more like buyers looking for 6,000. So truly, the 6,000 square feet detached actually has the most transactions as compared to the whole total numbers of transactions in District 15. Now, with that, I'm going to end my presentation there. I'm going to pass my time to Michael.
Thank you, Justin. I'm Michael. I'll be covering the 616, and where is 16? We got actually 5 sub-areas. Standard Lucky Heights from the left. Next week is the Q Drive, Jalan Limau. This sector, based on past transaction, is always have got the most transaction in the District 16. And to its right, we have got the Eastwood, Bedok rear area, where quite a number of houses here are leasehold. To the north, we have got the Tanah Merah, Kecil, and the Bigville area. And on the top right corner is the Guan Chun Harvey Avenue. Now, there is a sharp drop in transaction, Q2 8 versus last quarter 27, a good drop of 70%. And year on year is even 81%. Correspondingly, the house type is also reduced. As you can see, terrace house, 76% drop, and so is semi-detached, with only 1 transaction for detached. Now, besides drop, there's also a drop in price and PSA. For the average of terrace houses, you can see a slight drop, 3.5 mil, and for semi-D is 5.3. The gap between terrace and semi-D is about 1.8 mil. And this is quite consistent. If you look at Q1, it's about there, 1.8. So unlike District 15, which I've heard Justin presented, this is the type of price that you can get in District 16 for terrace and semi-D. In terms of PSF, semi-D, there is actually a 10% drop to 1,250, and detached house is 1,001. The exception here is that we got a terrace, which actually has gone up to 1,824, and this is the highest. Right? This is the highest. The next highlight is that there is a high volume transaction in the Q Drive Limau area. Where is Q Drive Limau? You can see from the map here, it's actually bounded by the East Coast, Upper East Coast Road here, and this is Bedok Road, Upper Changi Road, Bedok South Avenue 3, and Bedok South Road. Why is there a high transaction? Two contributing factors. It's a bigger area and with more landed house. And the other thing is there is also a mix of landed freehold and landed leasehold. In fact, Q Drive leasehold estate has one of the biggest leasehold in the east of Singapore. And that actually helps to increase the number of transactions, which you can see from here. Q2 out of the 8, 6 are from this Limau Q Drive area, 74%. And over Q1 is also one of the highest, right? 26%. At the bottom of the chart, you can see the whole of 2022, right? We've got 13 transactions in Q1 with a 39% weightage and 17 in Q2. In fact, Q2 has one of the highest transactions. If you have noted the earlier presentation by Willie, weightage 40%. And so is Q3 and Q4 of 2022. Next sharing point is that there is actually a drop in PSF below the 1,004 PSF. For Q2, 75% below the 1,004, and it's actually worse off than Q1, which has got 51%. Looking at Q1, there is also a transaction of above 2,000 PSF 4, whereas there's none in the Q2, probably because there are only 8 transactions. Next sharing is that in terms of value, the bulk of the transaction, 75%, are actually below the 4 mil mark. Okay, and this is consistent with Q1, 74%. If you look at the Q2 at the bottom, there's one transaction that's above the 15 mil. This 15 mil is rare. It's unlike in the 15 detached houses are 15, 20 mil. What's so significant about this house? Address 26 Q Drive, you can see the facades in the center. It's actually on a high ground. Although the land shape is not regular, but the land size is big. Right? The land size is big, as you can see, is 14,000, and the price tag is 15.3 mil. From the record in past transaction, detached houses above 12 mil, we have in 2019, and this in fact 15,000 is the largest area. And this one location is at Jalan Anjing Laut. November 20, we have also another transaction, 12.3 mil. What is interesting is the September 22, this area is at Harvey Avenue. The land size is only 9,000, but the PSF is high. So it's one of the highest. Right? On an average, it is only about 1,001, but this is 1,005. And the last transaction beside this one is in December, 12 mil. Okay, and PSF is only 960. So that's the kind of detached house and the price that we have in District 16. With that, I'll pass on to Will to cover the District 10 and 11. Will, please.
Thank you, Michael. Good evening, everybody. So today I'm going to share a bit of insight about D10 and D11. Let's show you let's start with D10. So okay, so for this D10, to recap on the first quarter, as you can see, the overall average sales and PSF. So for average sales, there's actually a dip. Yeah, but for PSF wise, there was an increase of 7.6%. But right now, looking at this, sorry, I just now going towards Q2, you can see it turned the other way around, where there's an increase in average sales price, but a decrease in PSF. So bringing the average sales price increase of 8.7%, and PSF drop a dip of 4.5%. Okay, and next we are going to see semi-Ds. Okay, as over here you can see that the semi-D here, which is a 18.3 increase. Okay, so what makes this semi-D price increase in this quarter? Mainly we are looking more than 45% of the semi-D that's being transacted with a land size more than 3,820 and above, crossing the 9 million mark, but hence PSF, there's a slight drop of 1.3%, bringing the average sales of this entire semi-D within D10 to 8.3 niche million, which is an 18.3% increase. Moving to the next slide, so you are looking at GCB average value. So versus Q1, quarter one this year, there was 2 units that's transacted. Same goes to this quarter 2, there's also 2 units. But again, you see that the growth in terms of value, in terms of PSF, is right now at a much slower pace compared to the previous year. And of course, more of the house down here in the quarter 1, hovering about 4 million to probably slightly below 15 million. But this time around, you can see more houses here. More of the houses is within this 7 million mark to 15 million mark, close to 15 million mark in terms of price. In terms of PSF, okay, quarter 1 did slightly better on an average of $2,200 PSF to more than $3,000 PSF. And Q2, you can see bulk of the unit that is transacted are hovering between the $2,000 PSF mark to the highest of $2,499 PSF. Next, we're going to show you about D11. So 11 wise, we're going to show you in decline of volume, okay, in terms of transaction. So previous quarter, Q1, you can see total of 16 units that's been transacted. But this quarter 2, we have only 8. And of course, what I'm going to cover is more about the detached in the next slide. Okay, you can see though the average PSF value and PSF decline, okay, okay, sorry, in terms of detached, overall detached price has dropped by 11.5%, and the price also dipped by close to 10%. But being one of the popular among buyers, PSF still encountered, I mean, because for the appetite of bigger plot of land, but you can see the pressure, the downward pressure of the market pushing value and PSF downwards. Next, 70% of we have close to 76% for Q1 and Q2, still hovering about houses that's being transacted more than 10 mil. Okay, and this is the one that probably you can take a look. So price today average about $2,000 to about $2,600 for quarter 2 compared to last quarter. PSF has dropped quite a fair bit. And some of the houses that is being transacted within D10 are mainly of bigger house type and of bigger land size. You can see about 75% of the house that's being sold in Q2 with a land of more than 5,000 and above. So appetite for big land, buyer with appetite of big land are still looking for sizable land to purchase, yeah, for their own use. Next, I'll hand over the airtime to my colleague Cedric to illustrate more on D21 and D23. Cedric, please.
Hi everyone, thanks Will. Okay, so let me dive straight to D21. Okay, and as the essence of time, I think I shall skip this. Okay, firstly, the first highlight I'd like to point out for D21 is that GCB volume is pretty consistent overall compared to consistent with the overall market. As you can see, the GCB transactions for this quarter, there's none, 0. Okay. And if you can trace back all the way to 2015, you notice that these are the volume number of GCB transacted in a year. The norm between 2015 all the way to 2020 is between hovering around the 30 plus to 40 plus figures. And then, of course, there was an outlier in 2021 post-COVID. So then everything surged, and then so that was a memorable year for all the GCB, for the GCB market. So a big hoo-ha there, or a lot of news articles on it. And then for 2022, it fell back to the normal range, which is the 40 plus. But however, this year, you notice 2023, we have already crossed the first half mark, yet there are only 7 GCBs being transacted. So an interesting thing to note is, will we be witnessing one of the worst performing years in the GCB market since 2015? All right, so there's something for us to think about. Okay, the next point I want to highlight for District 21 is the 999 and freehold semi-Ds. In actual fact, are growing at a more significant rate. But if you look at this chart over here right now, the semi-Ds only, in terms of sale value, is only a very minute 0.3% growth. And the PSF has actually dropped quite significantly. In fact, the highest among all the various categories of houses are 26.2%. However, okay, so it's written here, average sales price. Average sales price, sales value, 7.55 million, and average PSF 1.63. However, there's the particular outlier transacted in Q2 for the semi-Ds that actually brought down the price. So what I'm trying to say is the figures are actually skewed. If you take away this outlier, because you notice the per square feet transacted was only $550. So this caused the figures to be skewed quite a fair bit. So in actual fact, if you take away this outlier, then the average sale value is actually 9.2 million, and the average PSF is actually higher. And the sales, instead of just a 0.3 figure growth, is more significant, 22.6%. Okay, so the question is, are semi-Ds in D21 actually bucking the trend? Of course, it's too early to say. We will find out more in the next few quarters, like it's consistently performing at this rate. All right. The next point I want to highlight is the average new development landed sale prices. Okay, in terms of PSF. Now, average sale prices in terms of PSF for new landed developments in District 21 actually transacted at about 2005 at least and above. Okay, the first example you want to see is this 34 Jalan Jambu Air. Is inching towards District 11 already. Therefore, you notice the PSF is actually close to 3,000 per square foot. Okay, the second example, okay, this one at Yutong Avenue, and it was transacted around 2005 PSF. The third example, okay, 9 Hua Guan Crescent, okay, it was sold for 2,700. Okay, so this is actually the norm for new landed houses, the price in terms of PSF. However, the interesting thing I want to highlight to you is the next slide. Okay, currently there's a brand new pair of semi-Ds at Lorong Kismis area going for way below this average price of 25 and above. Okay, and they're asking is only 1,997 below. Okay, below 2,000 per square foot. Basic features is already TOP. The land is 4,300. 4,300 is a detached size land, mind you. Also, build up 7,700. It comes with pool and lift, 5 bedroom, 6 bath. It has a basement as well that can park 4 cars, and asking only 8.5 mil. Okay, so this is the one that we want to highlight to you. Long keys means a pair. Right now, there were 4 units, 2 already sold. So right now, only 2 left. Brand new landed house going for below the norm, the current market norm in terms of PSF. So if you'd like to find out more about this, do give us a call or give whoever, which lender consultant that invited you to this webinar a call to find out more from us. Right. The fourth point I want to highlight is the even spread of house transaction across the various price range. Now, if you look at the figures here, the boxed up figure, so it's pretty consistent there. That between 2 mil and all the way up to more than 20 mil, there are transactions. Now, what does this tell us? This tells us that basically for District 21, the demographic of the buyers are pretty wide, the range, because you have 99-year leasehold terrace houses, and then of course you have the mid-range semi-Ds and terraces, semi-Ds around probably the Chunting area, the Toyi area. And then you go up to the higher market landed houses at Hua Guan area or Sunset area. And of course, within District 21 as well, there are the creme de la creme landed houses, which are the GCBs at King Albert Park, Yarwood and Binjai area. So that's why it's quite a broad spectrum of buyers that we have in District 21. Therefore, you can see all these across the whole board, there are transactions. Okay. And one more point I'd like to highlight is the dominance of transaction prices. Despite the fact that there are broad ranges, between 2 million all the way to 20 million, yet you notice this very interesting thing over here is the weightage. Okay, despite the volume drop, but the per square foot of the transactions are still more or less 1,008 PSF or more. So buyers want to come to D21 to buy houses, they must be prepared to be able to afford houses that are priced at least close to this range, like 1,008 PSF. Okay, so that's all I have for you for D21. Next, let's move on to District 23. Once again, in the essence of time, I shall skip this. That shows you where all the regions of the houses located. Okay, the first point is pretty much the same as the previous district that I've highlighted regarding the GCBs. Okay, I noticed there are no transactions at all. In fact, this is already the third quarter back to back whereby there are no GCB transactions in District 23. Okay, so I shall skip this. This was already highlighted. Okay, the second point I want to bring out is, okay, you notice the semi-Ds, the sale value increase very interestingly for semi-Ds. It's really bucking the trend. This one, if you look at these figures here, and even for the PSF, very impressive growth in terms of 33% for the sale value, and the PSF growth is impressive 37.2%. So are the semi-Ds in District 23 really witnessing such a robust growth? Now, if we dive deeper, then then we realize that actually the figures once again for like D21, D23 semi-D figures are skewed. Okay, there are 2 outliers in the last quarter for the semi-Ds transacted, which are these 2. Okay, that really skewed the figure because these 2 semi-Ds, they are of the same region, same area, and their lease down to just, I think, about 26 or 27 years left. Therefore, that's why you will look at the PSF, it's only 299 per square foot and 258 per square foot PSF. But the interesting thing is, yet there are people that buys this houses, when the lease is only down to 7 years. Okay, so if you take away these 2 outliers, then the average PSF value, sale value, is only about 5 million, and the PSF is 1,008 plus. So compared to this quarter, then if you compare this quarter versus last quarter, the average sale value is actually a negative 21 instead of a positive 33%. And the PSF average is supposed to be a negative 21 instead of positive 37. So what does this say? This says that actually D23 semi-D performance is actually more consistent with the overall market right now. Okay. The third point I want to highlight is some 99-year leasehold houses in terms of per square foot, once again, are actually catching up with some of the freehold ones in D23. The first, a couple of examples I want to highlight, the 99 leasehold ones. These two at Almond Crescent and Verde Avenue. Their respective PSF was transacted at 1574 and almost 1004 PSF. Okay. Whereas you look at some of the freehold ones that was transacted in the same quarter, in the same district. Okay. Jalan Intan and Hong San Walk. The per square foot respectively 1537. 1537 PSF is actually lower than the 1574 of the 99 leasehold one on above. Okay, and 1006. So you notice that the 99-year leasehold per square foot is actually inching closer and closer to some of the freehold ones. Not all, of course, but some. Okay, of course, then the freehold ones are perhaps you need to put in more money into it to either redevelop or A&A, etc. All right. But this is something really interesting for District 23. The next point I want to highlight is all the transactions were done, at least for this quarter, within the 2 to 6 mil range. Okay, why? It's because for this particular quarter, there are no detached houses sold in District 23. If there are, then of course you'll see a couple of them reflected in a higher price range. Okay. All right, but yet then again, yeah, it's quite consistent also if compared to the previous quarter, bulk of it within the 2 and 6 mil range. Okay, and then the dominance of the 1007 to more than 1008 per square foot are the most number of units sold at this price range. So D23 people coming here, they must be prepared to be willing to pay at least 1007 PSF or more, okay, in order to get a house, if they want something more ready move in. All right, so that's all I have for you. Next, I shall pass the time to Sean to talk about the other district.
Hi, evening everyone. Hope everyone has, gotten quite a fair bit of insights from the other regions. Right. This will be quite a detailed one, covering quite an extensive area for the whole Northeast. The ones that we cover, HLD covers 19, 20, and 28. Right, so District 19 is pretty unique in the sense that we have a very well-balanced mix of house types, being such a big landed estate per se. All right, what is interesting, in fact, is that contrary to the market trends, District 19 the volume has actually increased, and it's quite a healthy distribution of increments. So you can see for terraces and semi-detached, even for detached, it remains quite robust. But what is interesting to note for District 19, right, when we look at the sale value, right, there's quite a big gap in terms for both the semi-D and the detached. So a lot of times when this happens, we also scratch our heads without diving into the data. We don't really know the reasons behind it, especially, for example, in this case, you look at the detached, it's a 26.8% drop. Could it be land size or condition? We'll find out more. Right, so for the semi-D itself, we notice a small drop, but diving deeper into this data, actually, we can take a look. For Q1 of this year, there's actually one single outlier. Right, this unit was also was sold by the team. Right, this is on the lower side in terms of the PSF. Many reasons for this being that its land size, although it's quite big, this unit cannot be subdivided. Right, so factoring this out of the picture, actually, if we look at it in terms of the size of the semi-Ds, there's not much difference for Q1 and Q2, all are around 3003 range. However, you can notice for the quantum, indeed, there's actually a small drop, pretty marginal, still hovering around the average 4.82 million. All right, and for detached, being such a big drop is quite alarming to some, those who especially who are looking or thinking that, oh, detached have dropped so much, maybe it's time for us to make an offer. Or those who are thinking to sell, maybe, oh my gosh, why 26.8%? So this 26.8%, actually we can see is really due to the average land sizes. Here we have 6 examples of the recently sold detached. So on average, you can see that the land size has dropped by 32%. So is 32% correlation to the 26% reduction in the price, right? So again, these are for District 19. Also, we will dive later into more details for the detached. So interestingly, also in tandem with the rise in the 99, all right, for the first time ever, we look at, especially for District 19, we have a very big spread of tenures for the 99 houses. There's some with 50 years left, some being more. But that being said, for the first time, we notice the gap in between for the 99 compared to the freehold and 999 gradually decreasing. And also for the first time, you notice since most of the houses have already crossed the 3 million mark very comfortably, 99 seems to be the alternative, maybe the best alternative, because you can also see that the prices are gradually inching closer, ever so closer to the 3 million mark, right? And here we have a table to actually showcase for the past few years, the price difference between the 99 and for the freehold 999. So you can see the the increasingly smaller gap in terms of the average value. All right, as usual, for a lot of transactions in this period, we notice that there's actually a very significant standout in terms of the PSF. So 1,005 to just slightly below 1,006 and definitely above 2,000 PSF. Again, this reflects a lot of the preferences for most of the houses that are being transacted. In fact, for this quarter, District 19 has quite a number of original houses being transacted, most of them hovering in the 1,005 and below range. All right, definitely above 2,000, this will be more of the moving conditions or the larger plots, with brand new units. Okay, and interestingly, back to the detached, for the first time ever, all right, since 2020, there are no transactions that's above 7 million. All right, this trend seems to rebuttal back into the rest of Northeast as well. Okay, District 20. Earlier we had a question on the floor with regards to the MRT effect. So I'll briefly touch a bit on the location of District 20. So with the Thomson East Coast Line, definitely District 20 has lots to benefit from it. However, that being said, the location of the MRT stations are pretty distinct, right? Sembawang Hills has always historically been a very high volume transacted estate. However, the MRT is actually located closer at Mayflower area, all right? And moving down the Thomson East Coast Line over here, they'll be passing all the way to the Thomson area, right? So Thomson Garden and Thomson Ridge, the other end of District 20, actually we are littered with many good schools, Catholic High, ITOM, so on and so forth. So these areas have become a treasure trove per se for those who are seeking the convenience, not only with the MRT, but being such within 1 km to the good schools. So from this itself, actually, we have dived very deeply into some of these transactions to show now that there's actually beginning to have a divide even within District 20 itself. Okay, so District 20 also goes against the trend whereby we have an increase in the number of transactions quarter on quarter. And that being said, actually is the terraces has rebounded, right? Not only terraces, semi-detached. So these two segments, actually, you can see there's still a very strong appetite. So could it be seasonality whereby a lot of younger owners, younger parents, looking to change their location in time for next year's primary school registration? Okay, so for the PSF gap itself as well, you notice actually there's a very stark shift for this quarter to have more than 40% above 2,000 PSF. All right. So don't just take this value at the surface. We need to really understand where these 10 transactions are taking place. Okay, of course, the average also is hovering around 1,005 to 1,007 for most transactions as well. Okay, so the first thing for the semi-Ds, actually we see also in line with the overall drop. District 20 is no exception, but diving deeper into these transactions, because it's also quite a significant drop, all right? So we have a record of 7 transactions, including 199 in District 20. So over here, we have showcased most of the units transacted in Sembawang Hills. So the first 2, Ellington Square and Jalan Sappan, these are actually also transacted by the team. These 2 happens to be one of the 2 that are move-in condition. All right, Sappan was reconstructed some time back, so it's a pretty move-in condition. Ellington Square, although being at the same sector as Sembawang Hills, this is actually a pretty unique plot because this estate is actually zoned for 3 stories mixed landed, as well as the proximity to the Mayflower MRT. So here it's pretty evident, all right, in terms of the PSF wise, this has crossed 1,006 for a so-called original 2-story, but has been renovated. The rest of them actually are scattered across Thomson Ridge, there's one, and the rest are also in Sembawang Hills, and most of them are in original condition. Right, so you can take a closer look. If you can zoom in, you can see the vast difference in terms of the PSF. And moving on to terraces, 17 transactions. So we really want to understand where are these high-performing areas, all right? So for Sembawang Hills, all right, in terms of Sembawang Hills, the quantum is on the higher side as compared to Thomson Ridge and Thomson Garden. But when you take a look at the PSF, in fact, Thomson Garden actually averages out to a very high of 2,789, right? Trying to understand this rift building up in District 20, you want to really understand why there's such a big gap. All right, so these 5 transactions are actually based in Sembawang Hills. What's interesting to note is the quantum, all right, versus the PSF. The top 2 units are brand new, all right? So brand new houses still have this allure by a lot of buyers looking for something that is ready to move in, all right? So things that a brand new would bring that an older house will not, all right? And below we have 3 also in the Thomson Hill and Sembawang Hills area. So most of them are original condition. Thomson Hill area is a bit more unique in the sense that some of them come with basement, and originally they are already 2 stories. So one thing to note also, you look at the quantum itself. Most resale in this half of District 20 rarely cross the 4 million mark, all right, with the exception of the brand new houses. Land size is also all pretty decent, 2,000 and above. Of course, this one 1,999. I'll just round it up. As compared to further down of District 20, these are 4 houses, also terraces. This will be in the Thomson Ridge and Thomson Ridge area, and also Clover Pemimpin. So these are also all original condition. Straight away, we can notice something very distinct. Over that side, the quantum-wise is around 4 million, whereas here you have smaller lands, number 1, and number 2, the PSF is definitely way on the higher side. And the average quantum, you're looking all also above 4 million for something that's original. So could this be an effect of the proximity to schools, to MRTs and amenities? And at the right at the other end of the spectrum, you have those that are performing with 3,000 plus PSF. This is not uncommon in District 20, especially when we look towards Thomson Garden area. All right, one thing to note, these are very small, unique terraces. Their land size 800 plus, 1,000, almost 900. So definitely this, you notice straight away, the max value that we are seeing that the houses being transacted are in the mid 3s or even 2 over million. All right, so these are probably the ones that are causing the rift in between in terms of the average transacted PSF for the terraces. Right, District 28, this would be for the foreseeable quarters. lots have to be done for this estate to peel away the layers, or especially with Poland collection ramping up their sales volume. So based on the transacted data, we see that again, looks on the surface, it looks healthy, right? Q1 and Q2, you see actually there's an increase, 13%. Terraces appears to be healthy, growing from 16 to 17, semi-detached as well. But once we start to peel away all these transactions from Poland collection, right? So peeling away, you can notice actually there's just marginal increment still for the total transactions in District 28. But what is most startling is when we start to peel away the data on a house type level. So straight away you see, in fact, terraces did not perform well. All right, it's a stark drop. But what's interesting, we are seeing a rebound of semi-detached, all right, from 5 to 10 units transacted. PSF-wise also, we have a very skewed data, in fact, but for the first time ever, we are, even for a big land that was transacted above 7 million, original single story, yes, crossed the 1,000 PSF for a large plot in District 28. Okay, and this round, we are very lucky to have a very detailed comparison of 3 houses, similar condition, different house types. And these 3 so happen to have transactions in this quarter and are all in Luxus Hills. So the first being a terrace. This is phase 4 or phase 5 or phase 6, right? So we have dived in to kind of understand what separates these few different houses. So for the terraces, you can see here a brief. So what they purchased in at actually 2.69, they actually kind of reaped a 51.67% selling today, right? So it works out to PSF. But what's interesting is comparing it directly to another unit in the same street. This is a corner terrace. What's interesting to note is both have very similar profit margins, right? But what's interesting also is that if we look at it, we want to see why is there such a difference when we calculate based on land, the transacted PSF. Terrace being a 2526 PSF, all right, is always hovering around there for the terraces in Luxus Hill. Corner terrace only raking in under 2,000 PSF. Right, so when we dive into it, we notice that the built-up areas are more or less similar. So to conclude, how much difference does a corner terrace, the value of a corner terrace as compared to a terrace, the extra strip at the sides, it seems it's only worth around 300 plus per square foot. Diving even further, when we take into consideration this same corner terrace, we compare it to a semi-D that was recently transacted. Both were bought also during the same time period. But what's interesting, you can see the capitalization for the semi-D is much lower. The question would be, oh yeah, maybe the owner sold too low. Is that true? So main thing is looking at this data, you can see, in fact, the PSF between the corner terrace and semi-D both are in a sense renovated and kind of very well maintained, all with no lift, right? So you can see the stark differences, whether is it worth paying so much more for a corner terrace or vice versa for the semi-D. So again, you look at this semi-D, the land size is around 2002. So the sold price is around 4.5. So a lot of decision making actually happens whereby when we want to start to compare, that's why District 28 for this quarter has a lot more transactions for the semi-Ds, because knowing at 4.5, what can you buy? So looking at, pardon the typo error here. So looking at this as a comparison, 4,005, these are 3 similar price points that have been transacted also in this quarter. So first thing you straight away you can notice is the land size. All of these houses, although in original condition, all their land size are above 3,000. PSF wise is also a stark contrast compared to the almost 2,000 PSF for the Luxus Hill semi-Ds. So a lot of times it's really making the informed decision. Do you prioritize land size? Do you have the time and flexibility to reconstruct something that is original into its glorious brand new form? Right, with that, we conclude Northeast. I'll hand back the time to Willie.
Thank you, Sean, Michael, Cindric, Will, Jason, of course, Justin. We have now on the screen basically not just the names, their respective districts, but also their contact number. All right. I think a lot of people have asked about the contact number. So I put all the numbers here as well, screenshot this. So in case in future there are any questions regarding, I think, this districts, you can just go to the respective, I call them, they are my experts, by the way, all right, in their respective areas. Okay. I hope you have found this session useful. All right. How was the deep dive? Deep enough? If not, the next time we can go even deeper. Right. In any case, I hope you have managed to understand. All right. Like we mentioned, the topic of today is about not just understanding basically the one number or two in terms of value and volume, but how does it translate in the very different district, the many different districts, the type of houses, even the subzones, right? Within each district as well. That's how deep we go, and that's basically the dedication we do to understand and analyze, right, this landed market. Okay, conclusion for today. What do we know? So the certain outlooks, okay, for 2023 and Q2, and some of the recommendations as well. Okay, and the animation is not working, but okay, one by one, let's go. First, there are 5 points here, right? First thing is we believe that landed prices should continue to moderate, okay, moderate due to effects of basically very challenging macro environment, interest rate, etc., right? When we say moderate, okay, let's go to the second point. And this doesn't mean that prices will crash, okay? In fact, we're even confident that it will not even return to pre-pandemic levels due to reasons such as the fixed supply, because unlike condos where government can interfere, the government has mentioned they will come in to interfere by increasing supply. Landed supply is fixed, okay? We also are seeing from the very top end, increasing demand from new citizens. And last but not least, okay, which we always emphasize to a lot of buyers, do you think the government can allow, right? In the past was whether they can or not. Now that they can, okay, with all the cooling measures, we call them the control levers. Do you think if the landed market were to crash or to even, let's say, minus, I don't know, 8 to 10%, are there not enough levers for the government to relieve, okay, to make sure that prices remain stable? Bearing in mind, the stated and proclaimed, okay, objective for the government is to ensure the sustainability, all right, or sustainable growth of the entire market, including landed. Now, the third point is the pandemic-led sellers market is officially over. Okay, we dare to declare, sorry if there are sellers here, all right, over because it's been 6 months, it's been 9 months that we see that there's this shift in terms of not just decline in number of buyers, but also increase in the number of sellers. All right, so the imbalance that we see in 2021, okay, we can officially say it is over, all right, except for some very rare, very low in supply houses, okay, which once you put it up in the market, you know that offers will come in straight away, all right? This means, what does it mean? Okay, in terms of, let's say, for sellers, you have to price your house right, okay, or risk being a leftover in the current evolving market. Okay, we still are meeting sellers who entered the market thinking they were 2 years ago. Okay, we just got one listing. Pardon me if the owner is here. It's an original house asking for $2,007 per square feet. $10 million. Okay, there was an internal joke about this. All right. So it's just a semi-D, I think 3,700 land, for example. If you were to test the market, you can continue testing, and the result will be you will get no inquiry. All right. In today's market, it's not that it's a bad market for sellers. It's just it's more balanced. Okay, it's more balanced than before. All right. So that I think for both buyers and sellers, I think the negotiation power is more or less equal. All right. Which then comes to the next point. I think both, okay, regardless of prices, regardless of market movements, we in HLD always believe that sellers and buyers, you should always make your next move. Okay, whether you're thinking of buying or selling based on your personal and family needs rather than market conditions, because you're after all buying a home, right? You're buying a home that you're going to stay for 8 years, 10 years, 15 and above. If this is the time for you to upgrade, to downsize, by all means, enter the market. All right, enter the market. All right, you don't have to wait. You can never time the market, not just a lender, but any market segments as well. All right. So last but not least, of course, is important if you want to enter the market and do understand the variation in a performance across the various locations, house types, etc., etc. And these are the non-price factors. Okay, will become more and more startling as the options start to increase. Meaning that if you're a buyer now entering the market, whether you're terrace, semi-detached, etc., there are more options now. You may not just be looking at price, because once more houses fit within your price range, you start to look at other factors. Okay, there are a lot of other factors that are not even in the available. For example, in your popular portals, for example, your facing, right, the unit number. That's if you know the address. Whether there's a granny's room, whether there are lifts, etc., etc. Okay, there are a lot of things, whether there are car parks, etc. All these things you need to know and then start to compare. Okay, so and then start to see whether this actually affect the price or whether that fulfills your needs or not. And we don't have time to share here, but you don't know HLD, we have a very unique website that actually contains a lot of all these qualities that's not found in any market or any portal in Singapore. All right. So if you have invited by any of our HLD member or Huttons agent, please go to them and then we can assist you. All right. Not just in finding house, even if you're a seller, we can showcase. Okay. So say really my house is south facing. Is there a premium, for example? Okay. We can show you. Right. Conversely, if you are facing a park, is there a premium? Let us know. We can come in and explain to you, showing with real life examples in terms of market, whether there's a premium or not. Okay. Right. So therefore, a deeper understanding of the landed market's micro factors. Okay. To us, there's 14 to 20 of them. If you don't even know there's 14 to 20 factors, please approach your preferred HLD consultant. All right. So that you can therefore make the right decision. Okay. With this, I conclude for today's webinar. We're running a bit, too much ahead of time. So I think we shall leave the Q&A. I believe my team has already answered. Please know the contact number. Yeah, okay, we're done. So sorry, please show the contact number of agents for various districts. Okay, I shall flash this while waiting. Sorry. Oh, we flashed it here. Okay, great. All right, last one. A quick poll just to help us. Okay, is this webinar useful to you? I know we are running is off the scheduled time, but I hope you agree that every minute, every second, I think not just time in the preparation, but I think in terms of providing information to you, I hope that's useful. All right. Thank you so much. So far, it's been 100%. Thank you. Even if it's 99, we're satisfied. Yeah, 100%. Thank you so much. All right. This, I think, is the very little encouragement that we need for my team of hardworking leaders here. All right. With this, hold on. I believe I'm going to the last page. Okay. Okay. So, okay, can you see this chart? We've showed this chart before, right? This is basically the 10 or 12 years. How will this chart progress from here? How do we end 2023? I think the next quarter, in quarter 3, will give us a lot more insight. All right, a lot more insight, and more importantly, how does it last through to 2024 as well? The next will provide this and more answers in the upcoming consumer webinar. 3 months from now, 12th of October is a Thursday as well, 8 p.m. All right. Until then, please do take care. If there's any questions, come to us, and HLD will always be here to serve all of you. Thank you very much, and good night.